The storms on Wall Street continued today after regulators seized the assets of Silicon Valley Bank, marking the largest bank failure since the 2008 financial crisis. The California bank's collapse, the second largest in U.S. history, is now raising concerns about the broader economy. CBS's Nancy Cordes has more.
The nation's 16th largest bank collapsed within hours, leaving customers in limbo and forcing federal regulators to swoop in.
One of our amazing investors alerted us, and essentially he said, the bank is imploding. Get out as soon as you can.
Allison Greenberg is the CEO of a maternity care startup based in L.A. Her co-founder transferred nearly all their business funds out just in time.
The website was down. The phone lines were tied up. Even now, if you call the FDIC, you can only leave a message. This is extremely scary for those of us who, pay salaries and put food on the table for our employees.
Silicon Valley Bank caters to tech companies, which have been hit hard by rising interest rates. Recently, the bank reported its assets were running low.
That was the flare that went up and said, hey, I got a problem. And that's when the run started in earnest.
The FDIC took over the bank around noon today, but it only insures deposits up to $250,000. The markets tumbled on fears that other banks could be at risk.
There are recent developments that concern a few banks that I'm monitoring very carefully.
The collapse came even as the U.S. logged another strong monthly jobs report, with employment levels surpassing their pre-pandemic high.
Overall, we've created more jobs in 2 years than any administration has created in the first 4 years. And I think all this matters.
This rare bank collapse highlights the challenges that come with high interest rates. But the Federal Reserve is widely expected to hike rates again in a couple of weeks as it works to bring inflation down even further. JB?
Thank you, Nancy.